All right, now if you've looked around at home loans lately, you might have noticed there's quite a few lenders now offering fixed rates under 5%, even going as low as 4.69%. And with typical variable rates sitting a fair bit higher, around 5.5% after the RBA's last cut, these fixed rate deals are looking pretty tempting, I must say, especially with some economists only expecting one or two more RBA rate cuts in this cycle. So is it time to lock in your mortgage with a fixed rate? Well, joining us to discuss that and more is the founder of Two Red Shoes Mortgage Brokers, Rebecca Jarrett-Dalton. G'day, Rebecca. Welcome back to the Savings Tip Jar.
Thanks so much. Thanks so much for having me again.
Always love talking mortgages with you, Rebecca. You were last on episode 63 in May 2024, and it's safe to say a fair bit's changed since then. But before we launch into this topic, do you have a savings tip for us?
So one of the things that seems a little bit strange, a little bit counterintuitive, sometimes joining those higher end membership kind of clubs. So I'm thinking of the Hilton membership as an example. Like that's pretty high end, right? Joining those clubs can often give you significant discounts that you would not expect and well and truly save back your membership, and sometimes even access to the captain's lounge and free dinner.
Yeah, for sure. That sounds all right. I'll need to look into that. I've not heard of that one. Hilton Rewards.
It's
I can't say
a strange one, but it's kind of cool.
Yeah. No, we always like something different on this podcast, and we like hearing about these these lesser known savings tips. So yeah, I'll definitely suss that one out because that could be all right. Although, yeah, I'm not sure if my budget typically allows me to stay at the Hilton too often, I must admit.
Right. Well, here's the thing, though, that's crazy about it. Often the Hilton includes parking. So you end up spending maybe $50 extra on the room, but you don't end up paying for parking, which we're Sydney-based, right? Parking is ridiculous. So that in itself can actually save a lot more money. That's the reason I started looking.
Oh, definitely. Okay. Yeah, there you go. There's kind of another savings tip within that one. So, yeah, so don't necessarily just look at the price, also look at what's included, whether parking and whatnot is included, especially in Sydney. Now, getting to the topic, fixed rates, as I sort of alluded to in the intro, they're looking pretty tempting at the moment. So I'll just ask you straight off the top, is now a good time to fix?
It's a really interesting question. Look, fixing your loan involves a lot more than just the interest rate, right? You've got to consider if you might be selling the property, what your future movements are, where you've got money, what impacts locking your rate could have that are kind of counterintuitive to fixing. But when you see those attractive interest rates, it's kind of, it's very tempting. You mentioned earlier that the rates are 1 to 2 perhaps rate cuts underneath where the variable rate is, or even a little bit more. And with predictions from economists of maybe only 1 to 2 more rate cuts in this cycle. Look, it's a brave person who thinks that they know what the RBA is actually going to do, but they're very tempting at the moment. So considered in the overall broader scheme, we are doing that exact math. We're kind of going, how many rate cuts are we expecting during that rate period? And will you exceed that if you were variable versus the fixed? And do the math, and sometimes it makes sense.
Yeah, for sure. It also falls back to, I think, not just trying to time the market and the rate, but it depends on if you want stability in your repayments, and like for the foreseeable future, say you can lock in a great fixed rate now and say, your lifestyle might change or whatever. It can be nice knowing that your repayment won't change with it as well. Just broadly, Rebecca, what are you seeing with your clients? How many are actually interested in fixed rates? Because the official lending data says not many people are locking them in at all.
No, that's absolutely true. And particularly while there's so much media speculation still about potential future rate cuts, there's not a lot of interest. A lot of people are asking the question, but they're not taking them up. I think that now that we're seeing numbers that's starting with 4, exactly as you've identified, that conversation will start to change.
Now, Rebecca, we know with fixed rates, they are a bit of a commitment in that you're not just locking in your rate, you're kind of just locking yourself to your mortgage, and you won't be able to make too many changes to that mortgage, which can cause problems, I guess, if you wanted to maybe refinance to access some equity, or perhaps even if you are going to, you have to move somewhere and you need to sell your property and pay off the mortgage. Basically, I just ask you, what are some of those considerations, those extra considerations when it comes to fixed rates?
So exactly as you said, quite often there's a restriction that says that you can't typically pay more than about $10,000 a year off on a fixed rate in terms of extra repayments. So that's still $200 a week though. So for quite a lot of people, that's still, quite a good target, shall we say. The other thing is, if you have paid that 10K extra in, you can't often redraw it back out again. So if you have an emergency, you can look at the money, but you can't touch it, and that's not really very helpful. As you said, fixed rate break costs can apply if you need to refinance a loan, if you need to sell, if situation has changed completely. That they can be quite nasty. We've seen some really big penalties. We've also seen some small ones, but particularly when there's a broad gap between the current variable and the fixed rate loan offer, that penalty can be quite nasty. So that's a factor. You have to think about that. But back to your first point, not everything is doom and gloom. You can, in that example, if you want to draw on some equity, you could go back to your existing lender and top up your loan as a separate split. That would not necessarily impact your fixed rate. So it's not all doom and gloom. There are potentials.
For sure. Now, as a broker, Rebecca, you see what the typical punter doesn't see from lenders and banks. What are some better banks and lenders to work with in terms of fixed rates? I've heard that there might be some serviceability like adjustments if you're locking in a fixed rate, particularly on the longer end, maybe 4 or 5 years. So what are you seeing on your end that might be a good little gold nugget of info for home loan customers?
Yep, spot on. So we've got some lenders who will actually give you a little bit more favourable loan or a little bit more favourable loan limit if you lock in for a longer period of time. But that tends to be a 5-year fixed rate, and that is, it's a little bit tricky. Where are you going to be in 5 years? That's a very long time to commit to anything for. The other thing that you can find some lenders will offer is actually an offset account against the fixed rate. So then you could have a little bit of best of both worlds, right? We will from time to time see somebody who's got a fully fixed loan and then they've got a bunch of savings that are not saving them interest because of the offset not working. You can get lenders who have 100% offset as well, not just 40%. So you can still then get your cash working for you at the same time as benefiting from, the lower rate, but also your comfort factor that you mentioned earlier. So in terms of those things, there's a couple of lenders who will allow construction under a fixed rate. It's just, like you say, the breadth of the market that we get to oversee. We are in a very privileged position and we can kind of navigate through that for people.
Yeah, offset accounts on fixed rate mortgages are definitely few and far between. But I know that, there are obviously some out there that do it, including my own lender, which I found out when I was going through the application process with them, and they were offering me a fixed rate, and I said, no, I'd prefer to have a variable because I can use an offset. And they said, oh, well, that's the funny thing. We actually do offer offsets on our fixed rate loans, which I found very interesting. Just another thing I've noticed with fixed rate loans that does sometimes put me off a little bit is while the advertised rates are looking pretty competitive at the moment, as we've mentioned, under 5%, as low as 4.69%, the comparison rates are usually much, much higher on fixed rates as opposed to variable rates. And I wonder, is that because they come with much higher fees, or is it something to do with the revert rate that essentially incorporates the comparison rate incorporates the rate that the loan will revert to by default at the end of the fixed term?
Spot on. It's the revert rate, absolutely. A few lenders are clever about that and they build in the future discount, but a lot of them just don't. So the revert would be to their standard variable rate, and that's what impacts that comparison rate. And it kind of shows you the fallacy of comparison rates, right? They were brought about for the right reasons, but they've missed the mark in that regard because they don't consider things exactly like that. I would say everybody with a loan more than $100,000 is not paying standard variable rate. So it's kind of irrelevant to have that even as part of that consideration. Do you know what the revert rate also can impact your capacity? Because when they're testing the capacity, they're basing it on the revert rate generally and not the lower fixed rate. So that could actually mean you could borrow a lot less with that particular lender. There's one on mine, I won't name names, but their borrowing capacity was dramatically lower if you chose a fixed rate than a variable rate, which is the opposite of what we said in the last little comment. Is right.
That's really interesting to know, Rebecca. Those gold little morsels of information that can come from brokers that you might not be able to glean just by browsing around a lender's website online. Thanks so much for your time on the Savings Tip Jar podcast. We really appreciate your insights as always.
Very welcome. Thanks so much for having me.
Thanks, Rebecca.